In today's video, we are going to do a complete fundamental analysis of Dangote Sugar Q1 2026 results. We will look deeply into the numbers that matter most to investors, what those numbers actually mean, the strengths and weaknesses of the company, the risks investors should watch out for, and what the future of the stock could possibly look like. If you're a long-term investor, a swing trader, or someone trying to understand how to analyze a company results by yourself, then this video is going to help you a lot. And please, before we continue, kindly subscribe to the channel, like this video, and turn on notifications because on this channel we discuss stocks, investing, business opportunities, financial education, and important insights about the Nigerian stock market. Also, if you need one-on-one guidance in the stock market, you can contact me through the email on my channel description and also the email displayed in this video. Without wasting much time, let's get started. Dangote Sugar Refinery plc is one of the biggest sugar companies in Nigeria. The company is involved mainly in sugar refining, distribution, and backward integration projects involving local sugar production. Oftentimes, investors analyze Dangote Sugar. There are some major things normally care about. They are revenue growth, cost of sales, gross profit, operating profit, finance cost, profit after tax, earnings per share, debt level, cash flow, equity position, future expansion plans, dividend potential, and industry outlook. These are the major things serious investors focus on, and today we are going to break them down one after another. Let's have a look at the overview of Q1 2026 results. Dangote Sugar surprised many investors in Q1 2026 because the company moved from loss back into profitability, and that is one of the biggest highlights of these results. The company reported revenue of about 187.7 billion naira, gross profit of about 43.1 billion naira, operating profit of about 45.7 billion naira, profit before tax of about 20.6 billion naira, profit after tax of about 19.1 billion naira, earnings per share of about 1 naira 58 kobo, compared to Q1 2025 where the company recorded losses. So immediately one thing becomes clear: the company has improved significantly compared to the same period last year. So now the important question becomes, is this improvement sustainable? That is what we are going to analyze. Let's start with revenue analysis because revenue is one of the first things investors check. Dangote Sugar generated about 187.7 billion naira in revenue in Q1 2026. But surprisingly, revenue actually declined compared to about 213.9 billion naira recorded in Q1 2025. So this means that revenue dropped by over 12%. Now, many beginners may think, if revenue declined, why is the market reacting positively? Very good question. This is where deeper analysis becomes important. Revenue alone does not tell the full story. A company can generate huge revenue and still remain unprofitable if costs are too high. And that was one of the major problems Dangote Sugar faced previously. So although revenue declined in Q1 2026, but the company controlled costs much better. That changed everything. Another thing investors should note is that the majority of Dangote Sugar's revenue still comes from 50 kg sugar sales. That means the company remains heavily dependent on bulk sugar demand in Nigeria. The Lagos region contributed the highest sales, followed by northern Nigeria. This shows the company still has a strong market penetration. But investors should also understand something important. Sugar business is sensitive to consumer demand, inflation, FX volatility, government policies, import costs, fuel costs, and transportation costs. So revenue can fluctuate depending on economic conditions. Now, this is where things became very interesting. Cost of sales dropped massively from about 204.6 billion naira in Q1 2025 to about 144.6 billion naira in Q1 2026. This is one of the biggest reasons the company returned to profitability. The reduction in raw material costs helped the company significantly. And this is a very important lesson for investors. Sometimes the company does not need explosive revenue to improve profits. Sometimes what the company really needs is efficiency and better cost management. And Dangote Sugar achieved that in this quarter. This is why investors who understand fundamentals do not focus only on revenue. They also focus heavily on cost efficiency, margin expansion, and operational discipline. And in this quarter, Dangote Sugar showed strong improvement in those areas. We need to also check out their gross profit analysis. Gross profit increased massively to about 43.1 billion naira from only 9.2 billion naira previously. That is a huge improvement. Gross profit tells investors how much money the company is making after removing direct production costs. This number is extremely important because it helps investors understand if the company's core business is healthy. A strong increase in gross profit usually means better pricing power, better cost management, improved operational efficiency, and better margins. And this quarter showed exactly that. Gross profit increased by over 300%. That is one of the strongest parts of these results. What about operating profit analysis? Operating profits also jumped strongly to about 45.7 billion naira compared to only about 2.7 billion naira previously. This tells investors that the core operations of the business became much stronger. Operating profit is one of the most important figures serious investors analyze because it shows how profitable the company's actual business operations are before taxes and some financial adjustments. This improvement is very positive. And honestly, this is one of the strongest operating recoveries Dangote Sugar has posted in recent times. Another important area investors should notice is the sharp increase in other income. Other income rose to about 9.4 billion naira. A large part of this came from the exchange gains. Now, this is important. Exchange gains can help profitability temporarily, but investors should be careful not to depend too much on them because FX gains are always not stable or predictable. Sometimes companies make huge FX gains, other times they make huge FX losses. So smart investors usually focus on sustainable operating performance. And thankfully for Dangote Sugar, operational performance improved strongly. So this result was not driven only by FX gains. That is a positive sign. Now, let's also talk about one of the biggest concerns, and that is finance costs. Dangote Sugar recorded net finance cost of about 26.7 billion naira. This is still very high, and this remains one of the biggest risks investors should monitor. High finance costs usually come from borrowings, loans, interest expenses, and FX related obligations. When finance costs become too high, they can destroy profitability. Dangote Sugar returned to profit in Q1 2026. Investors still need to monitor debt and finance expenses carefully. A company can grow revenue strongly, improve operations, and even return to profitability. But excessive debt pressure can steal down long-term shareholder value. And that is why finance cost is not something to ignore. Now, compared to previous difficult periods, the positive sign here is that Dangote Sugar managed to remain profitable despite those heavy finance expenses. That's to tell us that operational performance improved significantly. But moving forward, investors would like to see lower borrowing levels, better debt management, reduced interest expenses, and stronger cash flow generation. Because if finance costs begin to reduce gradually, revenue and profit continue improving. That combination could become very powerful for the company. From the cash flow perspective, another important thing investors should pay attention to is cash flow. Because profit on paper is one thing, while real cash generation is another. A company may report profit while struggling financially internally. So smart investors don't just look at earnings alone. They also monitor whether the business is generating healthy operational cash flow. This helps investors understand whether the company can sustain operations, expand production, pay obligations comfortably, reduce debt pressure, and survive difficult economic conditions. For Dangote Sugar, future quarters will become very important in helping investors to know whether this recovery is sustainable or just temporary. And honestly, this is where patience becomes very important in investing. One quarter alone does not tell the full story. Professional investors usually monitor consistency across multiple quarters before making strong conclusions. We also need to talk about market psychology because in the stock market, numbers matter, but perception also matters. Whenever a company moves from losses back into profitability, investor confidence improves. And once confidence starts returning, market attention also increases. Some investors may begin positioning early in anticipation of stronger future performance. Others may still remain cautious because of concerns like finance costs, economic pressure, consumer spending weakness, raw material costs, and overall market conditions. So what we are seeing here is a mixed but interesting situation. On one side, the company showed major improvements. On the other side, there are still risks investors cannot ignore. And this is exactly why fundamental analysis matters. It helps investors separate emotions from actual business performance. Moving forward, here are some important things investors should monitor in Dangote Sugar's next quarterly results. Number one, can revenue continue growing consistently? Two, can the company maintain profitability? Three, will finance costs begin reducing? 4. Can operating margins improve further? 5. Will cash flow remain healthy? And finally, can management sustain operational efficiency despite Nigeria's challenging economic environment? These are the kinds of questions serious investors ask before making long-term investment decisions. Overall, Dangote Sugar's Q1 2026 results showed significant improvement compared to previous struggling periods. The return to profitability is definitely a positive signal. Operational performance improved. Investor confidence may gradually improve. But at the same time, finance costs remain a major concern that investors should continue monitoring carefully. So this is not the time for emotional investing. This is the time for careful observation, patience, and proper analysis. Because in the stock market, people who usually win long term are not always the fastest. They are often the most disciplined. If you enjoyed this fundamental analysis and want more breakdowns on Nigerian stocks, company earnings, investment opportunities, and smart investing education, make sure you subscribe to my channel and turn on notifications. Here, we don't just talk about hype, we focus on understanding businesses, understanding numbers, and making smarter investment decisions. Also, let me know in the comments what you personally think about Dangote Sugar's Q1 2026 results. Do you think this recovery is sustainable? Or do you think finance costs may still pressure the company going forward? I would really love to hear your thoughts. Thank you for watching. I hope to see you next time. Invest wisely and stay consistent.